Good morning to all. Welcome to the Midweek Futures Traders Technical Brief. We are on the morning kappa at 8 on the Wednesday. So we are doing the week 2, November 2025. This table has the most popular products traded by traders. So I think there is a very big development here, and mostly it's due to the hope that the reopening of the US economy will be giving a positive vibes to markets. So we can see that from week 2 trading profiles for all these products, many of these products have now turned to positive from a neutral position. So the indices, especially for the US markets, have propped up their performance and move into positive setup, preparing themselves for maybe higher levels. And for metals as well, gold and silver were in the neutral setups the previous week, but these two also have moved into positive as well. Copper has been trading on positive for a while, but the performance thus far has been lackluster. But barring unforeseen circumstances, news that's coming through even from China may give the prices a boost. So the other one, which is crude oil, is remain neutral, and this is the one that we have been promoting through the market guide. It's still been trading neutral. I think there's been a bit of a conversation going on this because we missed the take profit price from 20 ticks. So I think that was a very big move, which actually reversed the prices of crude palm oil. Support level basically have been identified there. For local market, FKLI is as positive as the US markets, and the Hang Seng and the China indices too are all positive. So it looks like this week and maybe to the beginning of next week, indices should perform better. And we have here the palm oil, the FCPO, and what has been the main focus on this recent sell down has been the output, which has climbed 11% from the previous month to 2.04 million tons. And this is the strongest level since August 2015 and has outpaced the rise projected by analysts survey last week. Also, we saw exports, November 1 to 10 days have declined 9.5% to 12.3% versus the prior month. And this has also added pressure to palm oil prices. And from the chart perspective, we have seen after the sell down, there's been a support level closer to the 4,000 level, and prices now bumping around a certain range at this point in time. So we take a look at the US weather, which has actually transited from a very normal temperature to slightly colder. And this is one of the factors that we look at, when we are trying to project where the prices of natural gas is. So we are looking at natural gas today as for one of our guides for this morning. So if we look at the performance thus far, it's been trading in a range. And as I mentioned last week, although weather were slightly higher in temperatures in the US, prices were holding up, and now prices have now shot up. So I think that the move pretty much confirmed that traders are betting on colder weather during the winter months, and demand for natural gas will rise during that period. So we can also see that forecasters have shifted their forecast to colder across most of the US except for the Southeast for November 15 to 19, and also forecast for colder weather to over the middle of the country for November and from 20th to 24th. So basically, there is a play here. And for the guide this morning, we have the existing profile, which is positive, and short-term positive as well. Current price for natural gas is 4.53. Reference price is 4.35. So this is actually micro natural gas. And so if we look at the reference price of 4.35, we are looking at potential profit price of 4.55, giving a value of USD 200 and a potential loss of below 4.02, giving a loss of USD 330. This is, for obvious reasons, this is a poor win rate ratio, but we are basically playing a short-term trend currently on micro natural gas. For micro copper, we have maintained our call as from the previous week. And again, the hopes of the US government shutdown will end very soon. And data hopefully will show that deflation has eased top metal for consumer China. So I think this is something all of us will be looking for, when the shutdown ends, and talks of maybe ending next week or the week after. So we will bring forward our copper trade as from last week. So the last week reference price was at 5.02. Currently, we have brought forward to this morning's price of 5.07. The potential profit price remains at 5.16, which will give us the US dollar of 90 US dollar in value based on the 5.07 level this morning. And also the potential loss price will be below the 4.87, giving a loss of 200 US dollar. Moving on to crude oil. Again, crude oil has seen a bounce, from the time this guide was shared 2 weeks ago, right? And prices have not actually come down to the TP level, as mentioned in the beginning. The TP level was at 58.6. The lowest point that crude oil went to was 58.8. So because of these recent expectations that the reopening of the US economy will spur demand, we will still maintain that supply side will be the main concern for crude oil. Therefore, we will try and ride through the trade that was recommended, which is already 2 weeks and currently still valid. All right. So the brought forward price this morning is 60.98, and should the prices reverse to the 58.6 level, then there is a profit of 238 US dollar, which we are looking at, and also a potential loss price that is above the 62.60, giving a value loss of 162 US dollar. So that's all for me this morning. I will pass on to the next speaker. Thank you so much.
All right. Morning, everyone. Welcome back to Morning Kappa at 8. And thank you, Vincent, on the weekly technical setup. Right. You can see that we look at the Hang Seng Index. It has been moving high. At this juncture, I just want to point out that the Hang Seng is showing a positive price actions, especially after the Trump and Xi Jinping meet at the Korea, and also during the this recent CCP fourth plenary meeting, right? We can see that Xi Jinping continue to execute the 5-year economic plan, and important is that market responded these two events with positive price actions. So at this juncture, we can see that it's likely that Hang Seng is going to test 27,400 and followed by 28,500, and the downside support have been established at this 25,000 point level. Now, in the during the consolidations period during October, right, the 50 days moving average continue to move higher, and that shows that these two moving average line 20 and 50 has been a very strong downside support for the Hang Seng index. So quickly look at the stock heat map. This functions by trading view. You can see that if we are using the price volume, which is the total value traded over the week, as the box size, and also the over the week performance. So I just want to know for the past 1 week, what are the market trading at using the money, right? Then which counters give positive or negative returns. And then we can see that over the week, the highly traded counter is actually 9988, which is Alibaba, followed by 700 and the rest of the counters. So we can see that for the past 1 week, the top three tech stocks actually experience a mild profit taking, but the rest of the counters, the small mid cap, as well as the 700 and also the 9888, which is Baidu, is delivering positive returns, right? Last week I do mention that when the market is going for a mild consolidation or even corrections, Hong Kong market tends to move the funds into the banks. You can see that over the week, the bank give a mild, a bit of a positive return, about 3 to 5% range, right? And now, meanwhile, one phenomenon I just want to point out to you in the Hong Kong market is that these two counter 883 and 857, which is the two oil and gas counter in the China. So if you are following the Chinese YouTube or even the social media, right, they always brand these two company as Liang Tong Yu, the two barrel of oil, right? They always lift the index higher, right? You can see that in our watch list here, right? I often highlight that PetroChina should be one of the counters that you always look at if you're trading the Hong Kong market, right? As you understand that oil price is actually moving downwards, but these two 883 and 857, they have been bucking the trend and move higher. Now, then on, there are two more commodity related counters. One is 2899, which is the gold counter, right? And also 1378, which is the aluminium counter. China Hongqiao has been also moving higher, high fashion. So in the watch list, you can see that one of the commodity stock that I've been highlighting to you over the time, medium China, which is 2600, right? That you should actually pay attention, and if you could, you can actually trade at this counter, right? Although there are big cap counters, but you can see that all these counter, when the market move, they do give a range and volatility on the upside. So I think the next phase, what we want to see is that now we are in the earnings seasons, so we're going to take a look at the Tencent result this week, and following weeks we'll pay attention to the 981 as well as the Alibaba results. So hopefully for the next 2 weeks, Hong Kong market will see more active trading, right? So this today, I've added a few counters in our watch list, which is a PCCW, stock code number 8, Harvey Electric, Cathay Pacific, and as well as the Kunlun Energy. So there are two counters that I'll be looking at this morning. Firstly, COSCO Shipping, 1919. Share price have break 14 Hong Kong dollar, heading towards 15 and followed by 16. Downside support is 13. So for the past 1 month, this is the second time that we actually posted technical piece on the COSCO Shipping. I can see that stock has been steadily moving upwards since crossing above the 21 days moving average. Now, for those of you who are looking for buy low, sell high, you want to go for the stock that have yet to break out, you can look at the other group, which is stock code 1585, right? They are testing the resistance at $12.50. If you pass by some of the recently I traveled in the KL, I saw that they have a very big distribution center in KL. So, but anyway, look at these counters, right? These two counters basically I select based on the EV EBITDA, and at this juncture, their EV EBITDA are actually quite attractive right now. So if the other manage to break past 1250, right, they will highly to move towards 13 and followed by 1350. Downside support is at 12 Hong Kong dollar. So just recap, I think last 1 week we do see that the solar stock actually move up, the EV counters have moved up, right? I think the next laggard play would be the other, which is in the motorcycle industry, right? And so as for the US market, right, sentiment have become bullish past 2 days. I can see that on the Monday, the S&P have gapped up and moving higher high thanks to the over the weekend, China have relaxed the export of the rare earth and some of the critical minerals to US for another 1 more year, right? And we can see that for the S&P 500, right, same thing. I just check on the one week performance. We can see that most of the big cap have mild corrections, but you can see that in the US, same thing. The bank stocks have been very resilient, giving a positive returns, and followed by some others, small and mid cap stocks. So in the US right now, same goes to Hong Kong. Is where the small mid cap, they are actually supporting the market right now. So when the FANG stock actually taking a pause, right? Last 2 days I mentioned to you that we should pay attention to the cyber security, and yesterday the memory counters have started actually move up, right? The Micron, SDX, and the WDC, all three have notched a new high as of yesterday night, right? So I think that the funds after the move into cybersecurity and memory, right, soon they are going to move back to the chips and semicon play, right? And I think next week is where the NVIDIA is going to release their results. Quickly look at the NVIDIA chart. You can see that NVIDIA have a gap up on the Monday and it's slightly pulled back. And as long as stay above the support level of 185, right, they may have a chance to actually move on a higher high. That also really depends on next week, what's their result and what's the guidance for the NVIDIA. Now, secondly, you can see that one of the consumer stock, which is the travel leisure counter, Expedia, have delivered a very above expectation results. The stock have adjusted a very strong gap up, break past 250, and right now heading to our R2, which is at 280, right? So I think that apart from looking at the tech stocks, you can look at some of the consumer airline counters as well. So all the lists are being set out here, right? I think the fintech counter is also another group of stocks that you should pay attention to. Crypto, Coinbase, and some of the consumer counters, and the IT app counters here, which is APP. You can see that in the list, right? APP have actually moved up over the week as well. Okay. And as for Malaysia market, I just want to point out that we are heading towards December month soon, right? Historically, index will be giving a negative return in the month of November, but if you believe in a seasonal effect, seasonality chart, right? The past 10 years, FBM KLCI have a positive return in the month of December. The idea here is not to tell you to buy in December, but you should actually look for opportunity in the November. And if turns out to be December to be better, you should actually add on your positions in the month of December and follow through until the next year, January. So that is the strategy that I would have right now, and it depends on what counters that you are looking at. But in this of November, we should stay more active and looking for stocks to actually look at. In fact, this afternoon, 1 p.m., I have a webinar on how to reselect stocks based on the TA 1 p.m. All right, do register yourself and join us this afternoon that will screen through the market from Malaysia, Hong Kong to US. So S&P 500, right, you can see that for the past 10 years, more or less, right, did they always give a positive return in the month of November, and then in the December month, they will have a mild profit taking. Okay. As for the Hong Kong market, the fashion are more or less same as Malaysia, right? In the November, they have a slight dip. Then on December, we have a strong rebound, followed by a higher high in the month of January. So in terms of valuations, you can see that FPM KLCI right now, we are trading just a bit higher above the 5-year mean, right? And the XPX and the Hang Seng is one standard deviations above, right? What I want to point out right now is that Malaysia market appear to be relatively cheaper right now. And as long as our ringgit goes stronger, I think that our index will be moving on a higher basis. At this juncture, we keep a bullish bias on FKLI. As for FCPO, right, we keep a bearish bias with a stop loss at 4,004. So there are two counters that I like to seek your attention. Firstly, is the PPB group. On the technical, I can see that the stock actually have a break above 11 ringgit, and right now heading towards 12 ringgit and followed by 13 ringgit. Secondly, is the SDG. They also have delivered a good set of results last week. In fact, we have revised TP slightly higher, and right based on the price, I think we still have about 30% upside on the SDG, right? And in terms of technical, right, firstly, we will look for Telecom Malaysia. We break past 7 ringgit and 30 cents. Downside support is 7 ringgit 5 cents. First resistance 760, followed by 7 ringgit 75. Secondly, we have 99 Speedmart Retail, break past the 3 ringgit and 10 cents, climbing above the 21 days moving average. R1 at 3 ringgit 30 cents, and followed by R2 3 ringgit and 40 cents. Downside support 3 ringgit mark. So we have two breakout stock, Telecom Malaysia, and followed by 99 Speedmart. So I stop here and pass the stage to the next speaker. Thank you.
All right. Good morning, everyone. So today we have a company update on Kerjaya Prospek. So they announced two job wins yesterday amounting to close to 200 million ringgit. The first one, which is for a service apartment project called Viara 15 in Section 15 Shah Alam, awarded by its related party, Kerjaya Prospek Property. The second one is for 5 canal bridges on the Andaman Island in Penang, a project by Eastern and Oriental. So in terms of order book, Kerjaya's order book now stands at about 3.7 billion, giving a earnings visibility of slightly above 2 years. And the total job wins year to date now have reached to 1.16 billion ringgit versus our job win target of 1.6 billion ringgit. So we view potential upcoming projects, could likely be from the industrial space, given that Kerjaya's last industrial job, which was with Samsung CNT, the last time was back in October of 2022. So it has been 3 years. So if any award were to arise, that should serve as a re-rating catalyst for the stock. And in the long run, we view that Andaman Islands development, which would take another 10 to 15 years to be fully developed, to continue to provide job replenishment for Kerjaya Prospek. So no changes to our earnings estimates, given that the latest job win is within our replenishment assumption for FY25. And then buy with an unchanged target price of 2 ringgit and 15 cents. I'll stop here and pass on the floor to my colleague Jeff. Thank you.
Okay, morning. We have a update, or rather a results preview note on Kelington. Just let me push up the report. Okay, the earnings will be released on 24th of November. That's the third quarter earnings or 9 months numbers. They'll be having a investors call the following day. We do expect earnings to trend in line. Third quarter PATAMI coming in between 35 to 40 million on a quarterly basis. That's up 9 to 23% Q on Q as well as on year basis. Still, the emphasis on profitability should see a further uptick in terms of margins. I think both gross profit margin as well as the net profit margin should be incrementally higher this quarter, with seasonally stronger revenue as well. The advanced engineering services segment, which accounts for about 70% of revenue, should remain the key growth driver. You should actually see a stronger contributions from Singapore and Malaysia. These are the two key markets, offsetting a bit of a slowdown from China. China has been fairly soft in recent months. The industrial gas business should be supported by very steady LCO2, liquid carbon dioxide demand, albeit weaker on a year-on-year basis, coming from lower specialty gas. This is really the case of a customer of theirs in Bintulu having shut down operations a couple 2 quarters ago. So they're seeing a bit of slower loading from that especially gas segment, as well as softer project revenues. In terms of tender book, the number should be over 4 billion. Some delays expected as some of the outcomes in terms of tenders may be deferred to early part of next year, the first half of 26. Based on a recent meeting with management, we learned that the tender outcome for the second German fab that they are bidding for, the size of that particular tender may come in under 500 million versus that of 1 billion that was guided previously. That's really due to the principal, awarding part of that job to another contractor. So by all means, this is not really a big concern. There are still a lot of other portions of the job that has yet to be tendered out. So, they may be able to actually secure some of these additional jobs as we move on to 2026. We also understand that the tender for the India's first fab, wafer fab that's coming up, that's a joint venture between Tata Group as well as the US. Previously, it was indicated that value was at about 1 billion. Now they've said that it may actually go up to about 1.4. So it's an upsized tender due to the adoption of offset manufacturing, which is basically a process whereby a wider scope of services is outsourced to contractors. Like I said, I think some of these outcome of the tenders will be delayed to probably the first quarter of next year, or even first half of 26. Just given as to why there's been a bit of delay, I guess it's really the fact is that things have been rather slow in some of these markets in terms of dishing out new contracts. Outstanding order book of the group, easily over 1 billion. The number will be refreshed when they post their third quarter results. So basically, they should be busy well into FY27. No concerns there in terms of execution. Year-to-date order wins are estimated at more than 1.1 billion already. Should be able to get an update from management when they announce their results. Okay, just very quickly in terms of an update on the green hydrogen venture, this is something they've signed in terms of an MOU back in September. They are basically finalizing the term sheet with Worldwide Energy, which is the JV partner. Should be able to officially sign the document by end of November. So just to recap briefly, they will be constructing a 2 megawatt green hydrogen plant, utilizing Worldwide Energy's small hydropower plant at Batang Kali. In the initial production will start in sometime in the second half of next year. It takes about 9 to 12 months to power up the plant. 200 cubic meters per hour of green H2O will be produced. The initial off-taker will be SKS Coach Builders, which is a bus and a coach manufacturer. They have actually committed to taking up the initial production with their fleet of hydrogen-powered buses. Those of you who's been following the stock will basically know that Kelington is also working with the Sarawak state government on a similar venture to basically use green hydrogen to power the state's fleet of green hydrogen buses as well. So watch the space. I think there will be some announcements on that in the coming months. So overall, we've not changed our numbers, pending the results release, obviously. Outstanding order book is still very healthy. And as with their new order wins year to date, it's already 1.1 billion. So overall, if you look at the earnings CAGR, 25 to 27, still fairly healthy there, 12%. Our target price is based on 0.5 SD over the Bursa KL Tech historical PE mean. So that's 28.8 times. In terms of ESG premium, we have a 6% premium attached to our target price. So keeping our buy call, target price at 610. Okay, that's all from me, and I believe that's all from us on Morning Kappa today. I'll see you again tomorrow.